Hello everybody, J-Rock here, and I'm going to teach you about dollar cost averaging or double down. This is a chart of EU, and if you look at the monthly, it has come up to the resistance level of the 100 and 200, so it's going to come down. And the weekly is already coming down, so we're going to have a nice drop off, probably back to this level right here where there's some level of support at 120, give or take. And we're currently at 122.81, which is about 280 points up. On the day chart, we have come down yesterday hard. We dropped hard since 4 p.m. yesterday Central when the new day candle formed, and we have bounced up. So we could come up a little bit to that line right there, which is probably about 123.25, about 40 points from where we're at. Or we could hold up here and then drop back off. It may channel. H4 chart, H4 chart has some resistance right here. So in the H4 candles, we got resistance at 122.93, and that's about 10 points from where we're at. So what I'm going to do is I'm going to make an entry. I'm going to say sell. Let's change that lot size. Sell. Now, if this runs a little bit against me, so I've got a sell going on, 0.01, and I'm going to skip down to the lower time frames. Longer time frames determine direction. Shorter time frames determine entry. So I see that we're getting close to resistance on this level. I think it's going to come down. We've got a little room to run on the 30-minute chart. Room to run on the 15-minute chart. All the way up here. Plenty of room there. But you've got to find confluence of where you think the resistance is going to be. And if you get in a little bit early, then you want to make sure that you have enough equity to average down. So currently, I've gotten in and it's still pushing up. Let's go down to the 1 minute. And you see that it's formed what looks like a bull flag pattern with straight up. It's been channeling in that trend. And it had one pop right there above the channel. That is what I call a bull trap, trying to do one last exhaustion. So generally what happens if it runs against me about 20 points, which it's only about 2, 3, 4 points right now above where I'm at. So I'm just going to use an example. If it runs 20 points, let's say this is 20 points, I'm going to double down. And that's 20 or 30 points when it goes against you, because you're pretty sure that it's going to come back. Well, see, it's having one exhaustion pop. So let's say it ran another 20 points. I'm going to double down again. And this is a Vegas strategy where you need some deep pockets to be able to do it. It's a certain theory. Let's just pretend each of those entries are 20 to 30 points away from where you entered. So you'd only want to do 3 or 4 entries like this. We're getting one last exhaustion push. We're going to have a ceiling probably about 1.23. Okay, so we're going to wait and see where it ends up. And then I'm going to make one last entry of a 0.08. Now, when you double down, you bring your break even a lot closer to your last entry point. So my last entry point is a 0.04. And if you see, I'm only $1.60 in the hole from the top left right there. And when it falls, it doesn't need to come all the way down to 0.01. Just needs to come down to maybe 0.02. And I'm at break even. So we're going to watch and see. And it takes into consideration the commission charges as well. Okay, so we see that it did not go all the way up to 123, and it just broke down and started coming all the way back down. Now it's gotten under the 5, and because it had the exhaustion, if I were to draw some lines right here, you'll see what I'm talking about. Give me a yellow here, and I'm just going to go straight up here. That is my channel trend line right there. Moving averages kind of provide the other. This right here is called an exhaustion pop or a bull trap. People think it's going to go to the moon, and they jump in, and boom, the bottom falls out, and it comes crashing down. So the key is to know what you see, to recognize it, and play it accordingly, and then when you do, you'll be in the money, just like that. Now look at the profit. So I'm up $2.95 in the top left corner right there. On a short term, it's going to fall all the way back down to 122.50 or 122, 121.50. because as I showed you in the longer time frame, it is going to come all the way down. So that is how you play dollar cost averaging when you know that it is near the end of a major run and it's at the top, but it pushes up a little bit more against you. 20 points, 30 points, you double down. Another 20 or 30, you double down again, and then maybe one more time, because it's very rare it'll go 100 points against you when it's due for a reversal or a correction. That's J-Rock, over and out.